G'day guys, Josh from JT Home Loans. Here to give you a couple of good tips today, just really simple stuff, but not a lot of people do it in terms of ways to reduce your mortgage as quick as possible. First thing would be get an offset account. We've talked about it before, we'll talk about it again because it still remains one of the most efficient ways to get yourself ahead in terms of reducing that interest payable on your mortgage. So you're sitting 5 grand in there, great. You're sitting 10, fantastic. 20, 30, 40,000 on an average balance, you are gonna be smashing that home loan down as quick as possible. Which again, who doesn't want to then have all your money coming in each week or fortnight or month that you could just go spend on whatever because you don't have that mortgage commitment. What a great life that'd look like. So the quicker we can get you out of debt, the better. Then you can start spending money on toys and holidays and all the fun things in life because you've got your house taken care of. Make payments more frequently. Unless you're paid monthly, there is no real reason why you should be making your payments on your mortgages monthly. The more frequent you can do it, the better. If you're paid weekly, pay your mortgage weekly. If you're paid fortnightly, pay your mortgage fortnightly. The more frequent, the better, because understanding that with interest on your mortgage, it's being calculated every day. It's compounding every day, charged back generally on the anniversary of the account opening. Thinking about that, the more frequently you can make those payments into the loan, the less that can be compounded and calculated per day, and at the end of the month, ultimately going to be less than what it would be if you were paying on a monthly basis. Another great tip that most people don't consider that I try and encourage everybody to do is at the start of your mortgage, you're going to be paying the most interest at any point throughout the span of that loan or the journey of owning a home because you owe the most amount of money. So making an extra $20, $30 a week in repayments, we'll work on $20 a week. Over a standard $400,000 loan, $20 a week is roughly going to shave off 2 to 3 years off your mortgage, putting $30,000, $40,000 back in your pocket. I don't know anybody that doesn't want that kind of money. Yes, it's a slow burner. Yes, you're not going to see instant gratification on it. It will not look like it's doing a lot in the short term, but I can provide tools and calculators that are going to absolutely validate that over the long term, the value is there. There's basically a summary of how to get ahead with your mortgage, how to make extra gains in it. Even if you're on a fixed term loan, most of them will allow up to either 5 grand a year or 10 grand over the term of the loan that you can make extra repayments. So if you're solely fixed, don't think that you're out of the running for this either. Just remember that a lot of those loans don't have the ability to redraw. So when you've paid it extra, it's paid. Not like you've lost it, again, you're building equity in the property, but you can't pull it back if you need it. So the little amounts at 20 bucks a week, certainly not gonna hurt you. Thanks so much for watching the videos. If you can please click like, share, post any comments below, any queries you have about the content, anything else you'd like to know, just feel free to reach out. We're here for you anytime.